Looking for big income from tech stocks? Meet SOXY, SOXY, the Yield Max Semiconductor ETF. SOXY invests in top semiconductor companies like NVIDIA and AMD, but with a twist. It uses covered call options to generate a high monthly income, targeting around 10 to 12% yield. That means you get steady cash flow from your investment, but with some trade-offs on how much the stock price can grow. In this video, I'm backtesting SOXY to see how that income strategy actually performs over time. So stay tuned. Welcome back to Simply Money. So today we're doing another all-in scenario on SOXY this time, a yield max fund focusing on covered calls. This one is a semiconductor powerhouse. We're going to look at this as a very new fund, only been around for a year. There's very limited data. Just like with all of the funds, whether they're good or bad, 1 year is a short time frame. Don't put too much stock on that. But it gives you some idea how it's performed, and you can run the numbers yourself. If you like these scenarios, you want a copy of this SOXY drip sheet, it's available at Buy Me a Coffee in the link down in the description. Thank you for all those who have supported the channel. And the best way you can support us, if you like what we do, hit that like and subscribe button, share it with a friend, throw it on Facebook or some other social media. That really helps the algorithm. That helps us more than anything. And I appreciate all your support. So back to the video. What we're doing today is the typical back testing. We're looking at SOXY. We have 1 year here starting of January 8th, 2025. Share price of $50.97. It is a monthly payer. With our $525,000 portfolio, that would get us 10,300 shares. That's where we're starting. We're going to look at a full drip, 50% drip, and no drip. And then we'll do a contingent drip, and we set the percentage for that. So here we go. The share price is where we'll begin. Each month you can see that it has had some pretty steady growth other than the April tariff, the Liberation Day, so to speak, what they called it. We won't get into that today, but it caused the market to drop, and SOXY fell right with it. But it bounced back. Look at that. Got right back up to that $50 and beyond. Now we're sitting here in January of 2026 at $62.61. So for the 1 year, that is a 22.84% share price appreciation. For a covered call, dividend-focused fund, I'm very pleased with that type of growth. Now, how have the distributions been? Have they been consistent? Let's see. Started out at 52 cents. And as we come down, let's look at here when it dropped the share price to $36. And of course, the distribution dropped to 42 cents. But as the share price came back up, those distributions have come back up, and now we've gone up to 60 cents. We had a 62-cent high here, and now we're sitting at 60 cents these last couple months. So it has been nice and consistent with that. It has averaged for those months 52 cents. With full drip, we get this distribution in January 2025 of 52 cents. That pays out $5,400 for the month. With that, we're going over here and getting full drip, means we're buying more shares. So we got 106 more shares, and you can see the share total here. And so each month that distribution continues to climb as these shares increase. In the year, we've increased our shares by 1,447 shares, which has created this distribution to go up to $7,000 a month. So you've gone from $5,400, had again a few where it dropped slightly because of the share price dropping so drastically and the distribution following, but then it increased. And now you're looking at $7,000 a month. Because that's all being reinvested, you're getting more shares and had share growth. You've really seen a nice growth here of $735,000. Just in this year, you've seen this fund grow in market value to $210,000 increase. That's a 40% increase in 1 year. I don't know about you, I'm very happy with that. So SOXY on the full drip, definitely passed the test for this year. It's been a strong fund. Now, remember, This has been a good year, and for SOXY, it's been a good year overall. It doesn't mean that it's going to do that. Just like in April it dropped, we can have a recession, go into a bear market where this drops and stays down there for several years, where you're seeing your share price drop and your distribution drop, and so it won't keep going up like this. But we like seeing this climbing, and then if it drops, maybe it drops back some, but not all the way down to where it started. So that's a great thing. We'll continue to monitor this and do further updates. Now, the second scenario we have is if we do a 50% drip. We take half the distribution, which is shown here in column E, and that is $2,706, which is exactly half of this amount. The other half, so you get this twice, half of it here, which is being reinvested, gets us 53 more shares. Then you also get this amount, which is being used for income. And so $2,700, you can see it increases, and we end with, now you're getting $3,300 to spend, and $3,300 you're reinvesting, and we end with 700 more shares. During this, you've collected, so think about this, you've increased 700 shares, and you've collected $36,000 to spend. You've got $36,000 that you've reinvested, and you've got $36,000 of income. Not a bad run for a year. So how's that done in the portfolio? Not only have you collected $36,000, your portfolio market value has gone up $163,000. I'd be very pleased with that if I did a 50% drip and I was getting $36,000 for the year and increased my portfolio balance $163K. Not too bad. Now, scenario 3, we go into the zero drip. We're just taking the income, throw in all of my income portfolio into this fund, and I take it to live on. This is not financial advice, not a financial advisor. This is for informational and educational purposes only, but this is fun to see, in my opinion. I love running these numbers to see what things have done and possibly what they could do in the future. So if we had done that back in January of 2025, we would have collected $5,400. We would have collected all these distributions ending here in this current January, of $6,226. So for this year, we've collected $70,000. But how did we do? A lot of these funds, you get this nice paycheck, but then your fund drops. So you collected $70,000. You're not getting any more shares because you're not reinvesting anything. And your portfolio is still grown $119,000. I would say this year has been very good for anyone that owns SOXY from the beginning, or even early on, or especially if you bought in April. Imagine if we started this in April. It'd be really nice to see that. And we can do that. You can take your dates here and change it. You can change the amount that you start with here. We can do this. I know a lot of people like seeing that. So say we put $5,000. $5,000 a year later, you've collected $700 if you're in full drip, and you've increased your portfolio by $2,000. Same percentages. Percentages don't change. We do the $525,000 because that's what our series is looking at it as an income and to see the power of its growth. But the percentages never change. Coming down here, price increase. Over here is 40% for your portfolio balance increase with full drip, 31% with half drip, and 22% with no drip. But your total return has to take in consideration the cash that you've taken out. So with full drip, obviously it's still 40% because you didn't take any cash. So your current value growth is what your total return is, which is 40%. Great return for the year. With 50% drip, you have your $163,000 increase in value, plus you've collected $36,000 of income that you have to add into that because that's part of your total return, and that brings you up to $200,000 or 38% total return. Now with zero drip, you had your $119,000 portfolio balance value, and then you had your $70,000 collected that you have to add those together. Gives you $190,000. So with zero drip, your total return was still 36%. That is pretty incredible. A nice run for this year for SOXY. Now we're going to go over here to where we can adjust the portfolio. Let's say the drip. So say we want to take 20% and we're going to run that, and it just shows you, it gives you the ability to change what you're running there. So that is how that works. You can do this. A lot of these, we do it because we want to see, we need to do some reinvestment to keep the balance, and we want to make sure our balance stays. Maybe we want to get a certain amount, so we set the distribution to where we're collecting a certain amount. And so this just gives us a chance to play with that with this fund. Obviously, even zero drip, your portfolio is growing, so maybe you'd use this to determine how much you want to collect per month, and then reinvest the rest to see a growth. So there's lots you can do with that, just playing with it and changing it. And that is SOXY. What are your thoughts on SOXY? Do you own SOXY? Leave a comment down below. Let us know. Share with the community. When did you buy in? Were you fortuitous and get into it in April when it was $36? That would have been nice. Good time to buy. Really good time to buy anything because it was all on sale. We had a quick sale and then the prices went back up. So leave our comments down below for the community. Share what are your thoughts on SOXY. If you like these, throw in your comments. What funds you'd like to see. A lot of these funds that I'm doing have been from suggestions from your comments, so I appreciate that. Continue to do that for me, and we'll provide you what you're asking for, and we will see you next time on Simply Money.